Now, the RBA was helped, I guess, this week by inflation being held in check, and prices in supermarkets are actually falling. So I spoke to Coles CEO Ian McLeod this week about how he's seeing things. Well, Ian McLeod, the national accounts this week showed a big increase in household consumption. Are you seeing that?
I think it's some elements of our business, but essentially within food, it tends not to have the same material impact in terms of any stimulus effect that you might get in other businesses within retail. Our main focus has been on driving better value overall and getting more customers through our door.
Well, what the national accounts actually showed in an overall sense is that consumption is up in volume terms, but the prices are down. Is that what's going on the ground?
I think in our business, that's what we've been seeing for a number of years, not just recently. I mean, part of our underlying strategy has been to lower prices to give better value and therefore drive more volume. And I think that you're seeing that circumspection in the consumer. They are looking for that value. So the volume is out there to be achieved, provided the consumer believes they're getting value from it. And I think the equation here is between the volume that's been delivered against the volume returns that are being acquired. And I think that the combination for us has always been about driving more volume through delivering better value.
Well, because you're actually seeing, and have seen for a while, food price deflation, aren't you?
Well, that was one of the fundamental changes that we wanted to make. I mean, the first 10 years prior to the acquisition of Coles, during that decade, you saw rising food inflation every year of between 4 and 5%. And that's what we've started to challenge. And right from the offset, we looked to try and invest in price, lower prices, and we've seen food deflation during the subsequent periods. And I think that's been as a direct result of the actions that Coles have advocated and taken to the consumer. You've been here 4 years now. What surprised you most about Australian retailing? Well, I think that certainly within supermarket retailing, it felt as though it stood still, where the rate of retail innovation and change in other parts of the world had moved on quite considerably. And certainly arriving here and looking at the opportunity within Coles, that's just what we saw, a fantastic opportunity to operate and change and develop and grow the business. And you've certainly done that, but looking at the numbers, it feels like you've got a fair way to go. I mean, in the third quarter sales reports just come out, food and liquor and Coles was 6.1 billion, Woolworths 9.4, so still behind. And I think you're still selling less per square metre than Woolworths is. So does it feel to you like there's a fair way to go? I think from our perspective here, we've got to look at where Coles was and where it is now and the relative rate of change. And that's something that's still, we've got work to do, but we've been very encouraged about the performance that we've made. I think we've had in that period about 5.5% compound annual growth rate in comparative store sales. And our EBIT growth has been around 17% in that period per annum as well. So we've seen very significant improvements in terms of overall performance, and we've actually outperformed the industry. And we've now got 3 million customers a week coming through our doors, more than we had 3 or 4 years ago. So I think there's been pretty strong progress in the organisation in delivering that change, but I'll be the first one to recognise and appreciate that obviously we've got more to do. Do you need now to push for more productivity? I mean, do you have a problem with costs still that you need to fix up? Well, I think the job's not done yet, but we have made significant progress, and I think the efficiency in the stores has improved significantly. I mean, I can remember when I first arrived going and visiting stores and seeing pretty low productivity in terms of replenishment on the shelves and also high queues at the checkout. And I think by putting programs in place, by giving better tools to the management team, by re-rostering, by looking through how we replenish our stores more effectively and more efficiently, you can drive efficient changes and deliver better service as well. So we've had to build up a number of programs to improve our efficiency, to get the savings in the business that we can then invest back in price to deliver better prices for our customers. So a lot of companies now, including the Business Council, are complaining about the cost of doing business in Australia, particularly building things, construction costs, but also operating costs. So what's your experience on that? Well, I think you've got to look at a number of different aspects in your business, and where you operate, you have to take those things on board. I mean, we all face rising utility costs. We also face increasing wage bills as well. And the running costs of all businesses are increasing. And what you have to do is to try and look at how you can operate more effectively and more efficiently. But you have to do that in a way which doesn't detract from the core offer and doesn't detract from the service you're providing your customer. And does that include suppliers? You've had a fair bit of complaints from all sorts of suppliers, manufacturers, growers and drivers, transporters. Do you have to get more out of the supply chain still? I think you've got to look at who you speak to, and in any business and any relationship, you can have some people that are going to be happier than others. I can point to a series of suppliers who are very happy with their business with Coles. I had dinner with about a dozen suppliers a couple of months ago, family businesses, third-generation Australian businesses that have seen their business grow by 200–300% on average during the course of the last 3 or 4 years as a result of the work they're doing with us. So what we're trying to do is to build and grow broader relationships with our suppliers to make sure we've got a better quality product, a more consistent product coming through to the customer. And that's what we set out to achieve. There are multinationals who operate in Australia and in other countries as well. We're a very small part of their total business. So I think it depends on the size and scale of the supplier, and people have different views on what we're doing. But what we do is here to try and support Australian industry and Australian agriculture, and also deliver better quality and better service and better prices for the customer as well.
Thanks for joining us, Ian McLeod.
Really appreciate the call. Thank you.